with the How to Trade It podcast, and I am really super pumped to be on today with Jerremy Newsome from Real Life Trading. This isn't fake life. This is real life. Thank you, Jerremy, for being on the show today.
Casey, my pleasure, man. Thank you for having me and for your professionalism and all the our correspondence from here. I really appreciate your time.
Awesome. And I had the guy from Fake Life Trading on yesterday, and he just wasn't
He wasn't good, huh? I love it, man.
All right. So, Jerremy, tell me a little bit about yourself. Give me something that is interesting, not boring, something that people can learn about you on how you got started in trading, and anything you want to share about your background.
Totally, man. I can absolutely dive into that. So my name is Jerremy Alexander Newsome, and my first name is spelled with 2 R's because my dad's name was Jerry. So it's Jerry and me, Jerremy. That's how that happened. My mom, shout outs to mom. And I was born in Georgia, southern Georgia, man, like 30 minutes south of where they filmed Deliverance. So we're talking out in the sticks, And I grew up pretty financially poor. I had a great childhood. I had an amazing childhood, but I was just poor. And there was a movie that changed my life, man. I'm sure you've seen Forrest Gump. Everyone's seen Forrest Gump. It's my favorite film. And I started watching it for the very first time when I was 6. My dad, we went to the video warehouse to rent this film. Okay, so that's where we're going back. Video warehouse. We rent the movie, go home, watch the movie. It's me, my dad, and my oldest brother. His name is Roger. And about 75% of the way through the Forrest Gump movie, he says something that you might remember. He says that Lieutenant Dan invested in a fruit company and they didn't have to worry about money anymore. Well, dude, I had never heard that phrase. We don't have to worry about money anymore. Like that was like a brand new paradigm shift, world changing. What are you talking about? Everyone worries about money. And so I asked my dad, what is investing and what is the fruit company? So obviously he told me about Apple and he told me a little bit about the stock market. And I said, well, Pops, you need to do what he did. Let's go invest in Apple. And he's like, oh, son, this is a movie. It doesn't really work that way. This is a fictional character. It's a film. It's supposed to be entertaining. I was like, well, you just described to me why Apple is going to be a good company, so you should invest in it. Well, he didn't really know that much about investing. I begged him for a few months. Finally, he said, listen, son, if you bring me some money, I'll match it and I'll put it and we'll find out a way to buy some Apple. So this sounds like a Bryan Adams song, but the summer of 1994, I picked a bunch of blackberries and sold them door to door and made $1,500 that summer selling blackberries. And I brought it to my dad and we bought $3,000 worth of Apple stock back in 1994.
That's pretty good. How old were you?
I was 6.
6. Yeah, you said that. Wow.
6 years old. So that's kind of how my investing journey started.
So you had the desire to do an investment without your parents by pushing your parents at 6 years old.
Yeah.
That's crazy. I mean, honestly, that's crazy.
It's weird, man.
Yeah.
It's strange. But it was just I also, ironically enough, related to Forrest Gump, his character, because I was always a little strange.
Well, I can see that actually.
Yeah. Yeah, I was a little strange. Incredibly good looking, but just kind of awkward. And man, I got it. I understood him, and so I just wanted to do what he did, and it worked out really well.
Yeah, for sure. So what happened with that investment?
So that investment, we moved from Georgia to Florida when I was 12. And this was 2000, top of the tech bubble. I didn't know it. As we were driving down to Florida, I asked my dad, hey, what's Apple doing? And we pull it up at one point. And he's like, son, you're up 400%. This is the best trade you've ever done. This is the best trade you'll ever do. This is amazing. You need to sell. I was like, really? He's like, yeah, get out. I was like, well, okay, because you listen to your dad. So I sold, we sold, and I made 12 grand as a 12-year-old. So he gave me $12,000 in cash, and dude, I was elated. I was like, this is all I want to do from here on out. This is it. I'm just going to invest in stocks. That's all I want to do.
That's really good.
Yeah, since 12, I kind of knew. I'm like, I'm going to be in this to win this for a while.
Yeah. Well, I have a very similar tech bubble story, but I'm older, a little older. So I was in the Army, right? And I
Yeah.
was 23 years old getting out of the Army, and I was investing in stocks. I took all my money that I made in the Army, which was $800 a month, but you got no expenses. They pay for your room, they pay for your board, they pay for all of your bills. So I literally socked the entire thing away and put it in stocks. 100%. Like everybody else was buying CDs and movies, and they'd go and buy food. But me, I literally was like a miser, and I
Yeah.
put all my money into the stock market. So then when I got out, which was in May of 2000, which was right
Yeah.
before the big boom, the big bust, I pulled everything out because I wanted to start my own business.
Nice.
And so it wasn't any kind of skill. It was just kind of like you, very similar situation where I just was like, you know what, I need this cash, and I took it all out. And right after that is when it crashed.
How did business fare, the one you started?
Terrible.
Horrific.
Well, you know what? I was 23 years old, and I was like,
Dude.
I was into making money, but I was also into having fun. And so I just was really stupid. I did a lot of immature things and drove it right into the ground. But I'm still in business today, so.
That's it, man. That's it. I love it.
Okay. Well, I appreciate that. I want to ask you another question here about
Sure.
how you got into training, right? So you started, you sold your Apple, did really well, and you're still pretty young. So how did you get into starting your business and trading education?
Yeah, ma'am. I worked at a company called Nationwide Insurance, so everyone knows them, if you're here in the States at least. And I worked there from 18 to 24, and I love the company. I always give them a shout out. Like, I actually really enjoyed my time there, but it was just very, it was that corporate world, right? Fortune 200 company, and just suits and ties and whatever, and a schedule. You had to be there at a certain time. And this was 2010, 2011-ish is when silver started doing really well. I had learned about a strategy, which is still my favorite strategy. It's still the one I teach the most, covered calls. I learned about that from my boss. His name is Rob. And Rob and we actually still stay in contact a little bit. I had a one-on-one meeting with him where I was going to go over my performance as an employee. And I saw on his computer stock market stuff. I went to school, Casey, for a finance degree. I tried to get a finance education from the University of Florida, go Gators. And I did not learn anything about the stock market getting my finance degree, nothing. I learned about dividends and what a beta was, and that was it. Yeah. So a lot of accounting classes and managerial economics and bonds and coupon yield rates and mortgage amortizations. I didn't learn anything about stock market. It really frustrated me. So around the 20-ish, 21-ish, I just started asking other people, and my boss more or less kind of taught me a lot of what he knew. And so I figured out a way to do a self-directed 401k, which is where I sold my 2040 retirement fund, right? And turned it into cash and just traded through it. And so I was able to buy shares of silver. So this was my silver. This is my entire method for researching at the time. I typed into Google, which silver stocks to buy. That was it. The very first one that came up was First Majestic Silver, ticker symbol AG, because of SEO, I guess. And that's the one I bought. So I took all my money in my 401k, which was like 9,000 and some change, and just bought shares, which were like $12. And then they went up to 15 and some change in a month. So I made roughly $3,000 in a month. And that's when the light bulb went off, where I said, holy smokes, no one in my entire life told me that I could actually make money, more money in the stock market than at work.
Yeah, that's $3,000. So that's a lot of money. I mean, that's
man.
hard to get a job making $3,000.
That's what I'm saying. I mean, I was, I'm 20 at the time, and I make $3,000. So Nationwide Insurance, they pay great, I guess, but I was still making three-ish. So I made equivalent to what I made at work in a month without doing anything. And that was another paradigm shift for me. So at that point, man, I found out I fell down the rabbit hole hard. I went to every seminar, webinar, course, book, institution, altitution. Like I read, did, and was involved in everything. And you and I were talking about it a little bit before the show started. I went to a bunch of, South Florida retirement home seminar pitch presentations to learn more about the stock market, and they were god awful, just wretched, And I was like, man, this is so boring. Why does it have to be so boring? This is frustrating. Like, where's the jokes? Where's the stock market puns? Where's the music? Where's the hugs? And I just looked around. There's a bunch of old people just sleeping, and no one's caring. I was like, man, I bet if I was on that stage, I could make these people excited about this stuff. And it kind of started that way, man. It just like slowly morphed into everything, and that's why I really realized I wanted to start teaching. Is I actually always wanted to be a teacher. When I was in 4th grade, I asked my history teacher, how much does it pay to be a history teacher? He told me, he's like, not much, dude. So I didn't go that route, but I've always kind of liked teaching, because when someone gets that light bulb moment and they get that aha and they learn something, they have it forever. It's in their mind, it's in their core, and it becomes who they are. And they always have that forever. And I just think that's a phenomenal feeling.
Yeah, I think you're right. And, it's definitely something you can get excited about. Right? There's no reason to make it boring. I mean, there's some technical side of it, but I mean, think about it. That you just made $3,000. Like, that's something you should get excited about.
That's what I'm saying, man. Yeah, absolutely. Absolutely. And then I did some math on some other stocks. And I was like, well, dude, if I buy a stock if I buy 1,000 shares of anything, it goes up $1, that's $1,000. Casey, I had never done that math. I had just gone through all of school, and no one ever just said, simply put, hey, if you buy 1,000 shares of something and it goes up $1, you make $1,000. That's it. I was like, what? And I know we're going to talk about strategies in just a little bit, but that's something that I stick with that to this day. I tell people about trading. It's like, listen, if you risk 50 cents on 1,000 shares, that's a $500 loss. And if you are okay to make $1 or $1.50, you're risking less than you could potentially win. That's called smart trading, and that's a way that you can legitimately make money.
Right. Yeah, that's good. So after school and realizing they didn't really teach you a lot about the markets, how do you feel about the whole school thing in general? Was it really worth your time? Are you glad that you went in hindsight?
I don't have any regrets on it. I mean, I met a lot of nice people, and I got a lot of networking in. I guess I'm okayly happy that I have a degree. I mean, I did get my degree. I actually switched from finance to business management because they just weren't teaching me anything stock market related. I'm like, why go through all the hard work? So I got a business management degree. I graduated. I mean, it's cool, but I've never used my degree once, ever.
Yeah.
And also, no person I've ever interacted with was like, in order to do this business deal with me, right, I need to see that degree.
Yeah.
So there's a phrase that's very popular. It's all who you know. My viewpoint on that phrase is it's all who knows you, and what you do and what you say and what you stand for and what you believe. So I've always had that reputation of like, I'm just a man of my word. If I say it's going to happen. And anyway, the overall process, that whole thing, man, yeah, it was that transfer and that shift that kind of caused everything to begin to happen. So I'm glad I got it. I don't personally believe that college is worthwhile for 80% of the attendants who go.
Right. Well, the one of the things that you got to think about is your ROI. If you spend $100,000 to go to the University of Florida and then you end up working at Home Depot, there's a problem.
Yeah,
because you're going to be paying for that for the rest of your life, and unfortunately, a lot of the people, that's what ends up happening.
Yeah, no, you're totally right, man. And it's like, it doesn't have to be that way. Like if you're going to go be a doctor or anything in the medical field, absolutely, you got to go. And my niece wants to be a doctor. And so I was like, anything you want to do. But my nephew, Zachary, doesn't want to be a doctor at all. And he's not going to go to college. He barely wants to graduate high school. And I was like, no, dude, you have to graduate high school. You have to do high school just because. Like,
yeah.
You're almost there. But he's trading. Yeah. Like I taught him to trade, and he's a monster. right? Gabby's smarter than both of us. That's not my niece. Like Gabrielle is one of the smartest people. I mean, she's so emotionally intelligent and just she gets everything about empathy and sentiment and being kind to other humans. And Zachary he's just a trader, man. Like he loves trading, and so it's really cool to see. Like he doesn't even want to go to school now. Like a year and a half ago, he's like, I want to be an engineer, and now he's like, nope, I just want to trade.
You're a good influence on him. That's good.
Yeah, man.
That's a good thing. That's a really good thing.
I appreciate that. It's a potential career. That's why I tell people, like, you can actually make money trading. Because people who lose a lot of money trading, they're like, nope, it can't be done. It's impossible. It's like, no, it can happen. That's like saying you can make money playing basketball. You can. Like, you're not going to make money playing basketball. I'm not going to make money playing basketball, but it can happen. We can see it. Same thing with any other sport. If you're telling me that you don't think trading is a sport where you're gonna have to put in time and energy and drills and practice and sit at the free throw line and practice for 100 shots a day, like if you're not telling me that trading is not a sport, you're incorrect. It's like anything else. You got to become a professional at it. You have to treat it like a serious endeavor, and you can absolutely get paid doing anything in life, anything if you're good enough.
That's true. That's a good note. Well, you're right. We're going to talk about strategies, but I got two side questions before we get there.
Bring it home.
The first one is, I really like your map in the background.
Thanks,
I love maps because I like to travel. Do you travel at all?
All the time, man. All the time. Love to travel. This is actually a Mercator projection, which I'm not going to go into topography, but yeah, I love maps. So I do love traveling.
Cool. What's your favorite place to go to?
So far, I haven't been to South America at all. That's high on the list, but I loved Iceland. I love Aruba, and Dubai is high on the list, man. Dubai is one of the most interesting places I've ever seen. So I think those are the top three for me.
Yeah, Dubai's pretty cool.
Yeah.
Yeah. That's the only place out of the list you mentioned, that's the only place that I've been to.
Yeah, that place is sick, man.
Yeah.
Where did you go?
What's that?
When did you go?
2000 and something when I was in the military.
Oh, got it.
Little standoff.
If you went back, your mind would explode. I mean,
probably. Yeah.
Incredible.
I saw a YouTube video yesterday of a guy from Dubai. He was flying around the city on a jetpack. Like, are you kidding me?
That's pretty much Dubai. That's kind of how it works.
Yeah. Wow. Okay. Well, so then the last question before we get into strategy is, I was on your LinkedIn yesterday, and it just popped up on my notifications that you made a post, and I don't know if you read your own posts or if you just have social media people do it, but it was really pretty profound, and it said, remember, money is a tool. And I really like that because I talk about that all the time myself, so obviously I'm going to like it if you basically say what I say. But can you expound on that a little bit?
Yeah, man. One of the things that I started realizing as time was progressing in life, as I started trading more, is I realized that it all actually comes down to your beliefs about money, like how you trade. To an extent, to a degree, like it comes down to discipline, it comes down to beliefs, it comes down to your connection with money, because that's literally what you're doing is you're trading money, like you're increasing or decreasing your money supply. So the whole money is a tool. I mean, Dave Ramsey says like it can be a brick, and you can throw that brick through someone's window, or you can build a home with it. And it's your decision, like you're holding it in your hand, like you get to decide what you're doing with this brick. So the whole money as a tool thing is like you can use money to amplify who you are, to amplify your message, to amplify your beliefs, to help your community, your church, your family, whatever it is that you believe in. But at the core, it starts changing, and it needs to change your beliefs about how everything works. Because if we're talking about the markets, everyone says the markets are controlled by fear and greed. I disagree with that statement wholeheartedly. I think the markets are controlled by fear and optimism. Right? Greed is a state of the soul. It means it's an unquenchable thirst for money, and you'll never share it, and you'll never give it, and you'll never provide it. Like you're the Ebenezer Scrooge, like you're a terrible human being if you're greedy. Most of the people I interact with, 99.9% of them are not greedy. They're financially zealous. They want to help their family. They want to give to their church. They want to build a hospital. And so they want to make as much money as possible so they can do that. You just have to kind of create rules and boundaries in your head. Because if you say, oh, I want to take this trade, but you're afraid of being greedy, well, guess what you're going to do? You're most likely going to screw up that trade because inherently your mind doesn't want you to be greedy. So as I slowly started picking up those, thought patterns of people's beliefs and whatnot, I just really realized that's what a lot of people struggle with. It's not necessarily their trading; it's kind of their belief about money.
Yeah, I totally agree with that. And I also agree that a secret weapon that I use that I don't really talk about a lot is the weapon of giving. Because when you give, you receive back. There's a lot of things that happen with giving, right? So when you give, you're blessing someone else, but you also receive a blessing in return. And you also, it tends to come back to you. And that's not really the reason for giving, but it's a great benefit.
Bingo. No, bingo, man. And it feels good. It really does. It feels good to help because it's something that, especially if it's an altruistic giving where you do it without expecting anything in return, you just do it out of the goodness of your heart and really embrace it. Like if you're giving a beautiful, generous tip to somebody, just look them in the eyes and just be there with them for a moment. Just be in that presence and not feel guilty and not feel scared or afraid and not go, oh, I only have $100,000 in the bank account and I'm giving $3,000 as a tip. That's 3%. Like, don't even do the math. Don't worry about it. Just go out of your comfort zone, push yourself a little bit, and just really embrace that moment so that it can continue happening to you. I fully agree with you, Casey.
Yeah, that's really good. And just another little thing about giving, because I enjoy it and I kind of make it a sport in itself. I look at it as a fields, right? Like I'm a farmer and I'm looking at fields that will yield the most crop. And just like investing too, but I want to give my money and put it in places where it's going to get a maximum impact. And that's where the whole tool thing comes in. Okay, I'm going to use this. I'm going to invest it. I'm going to sow a seed, and there's going to be a harvest. There's going to be I'm putting my money to work. Something good is going to happen, especially when I put it into the right place.
Agreed. Yep, totally agree with you.
So, okay, good stuff. Thank you.
Yeah, man.
All right. Tell me about your strategy. What do you like to do?
3 favorite strategies. So I definitely day trade, but that's number 3 because it's a little bit harder for a lot of people. My 2 favorite strategies, the ones I do the most often, is I buy shares and I do covered calls. I buy shares of companies that I know exactly how they make money. I use their products every single day, and I interact with them frequently. So as an example, Apple, Facebook, Twitter, Snapchat, and I will take these trades. I'll take these stocks. I'll buy 100 shares. I'll do covered calls. I'll get called away. Cool. I'll make a profit, and then I'll go put it in something else. AMD, right? Micron, NVIDIA, Take-Two Interactive, Activision, and I'll just kind of keep repeating that cycle. So that's my favorite strategy. Second favorite strategy is I sell puts, naked and/or cash secured. So I love selling puts. Once I get called away from a stock, I'll sell puts on the stock that I actually want to own, get put to shares. And then when I own the shares, I already want to own them anyway. So now I'll start the covered call process. So taking something like Southwest Airlines right now, or Boeing, or DocuSign, Planet Fitness, GoDaddy, Salesforce, Wix, Shopify, and I'll play those names until I get called away, and then I'll just kind of repeat the cycle. And then that's kind of like the longer term, mid-term, swing trading approach. And then I day trade. And my day trading, man, I am hellaciously boring. So I do the exact same thing all the time. I look for a big name company, so something that everyone knows. Today I played Boeing. Nothing special about that, right? And I look for it to gap above previous highs or previous lows. So the more days price action that it's taking out, the better. And so, for example, Boeing today, it gapped above 3 or 4 days in a row and actually took out like 17 days worth of price action at open. So once I look at a good gap and I kind of see nothing really in the way from that gap, I'll zoom into like a 3-minute chart. I will look for a specific type of candle, which is called a high wave candle. So that candle has like an upper and lower shadow. It has a little bit of a medium-sized body. And then I just take the break of that candle always. And that's literally my strategy.
So if it gaps up, you're buying on the open.
Yeah, I'll buy within usually 9 to 12 minutes of market open.
And then how do you manage the trade?
Great question. So I'll just give Boeing as an example. I know it won't make this one specifically evergreen, but if you guys are interested in looking at it, go to May 21st, 2020. Hopefully you're listening to this in 2047 because Casey's awesome. But Boeing was gapping up. And again, like I said, it was clearing multiple days of resistance, multiple days. And Boeing, as you and I both know, Casey's going to go higher. Yep, it got absolutely train wrecked by this whole event, but it's unquestionably, unequivocally going to go back up.
Right.
So you have this really nice gap. You're clearing multiple days in a row. And the first 3-minute candle, the high of the candle was 138.63 and the low of the candle was 136.15. So you're looking at about a $2.50 risk. So what I did is I got in at 138.65 with a stop at 136.10. And that's my risk at that point. So that I go, okay, if I'm wrong, I'm gonna lose $2.50 on this trade. I take my risk, which is $1,000 per trade, and I divide it by the risk stop size. So if I take $1,000 divided by 2.5, I'm gonna come up with the amount of shares that I need to actually take in that position. Once I do that math, it helps me kind of come up with and determine how many shares, which is 400, how many shares I should be in. And I buy that amount of shares, and then I will trail my stop as the trade starts working out, and I will aim for 2 times my risk. So if my risk is $2.50, I go for $5. If my risk is $1, I'll try to go for $2. If my risk is 20 cents, I'll try to go for 40 cents. And
okay, so if you're risking $1,000, that
Yep.
means if you're going for double, that means you make about $2,000 on the trades you win.
Correct. So actually, on average, out of the course of a month for my day trades, Casey, I bat like a 51%, 51.2, somewhere right around there. And I lose on average what's called 0.7 risk units. So on average, when I'm wrong, I lose 0.7. So technically $700 in this instance.
So even if you risk 1,000, most of the times you're not going to lose that whole thing.
Bingo. It's like, because again, if you're getting into a trade, like you should generally have a relatively good idea if you're right or wrong, and you can start moving your stop and you can start trailing it and kind of being in something and you have an okay idea of what's happening. So from that standpoint, you kind of play it that way. And then the second instance is the trades that I win on average, I win 1.4 risk units, which would in this example be $1,400. So that's where I kind of get that.
So that's right, 2 to 1 exactly.
Yep, 2 to 1
Yeah.
exactly.
Yeah.
And that's just really where I make my bread and butter. And then if I actually have a good trade that continues to really run, awesome. That's where I can start stacking wins.
How many day trades are you doing a day?
Generally, no more than 4. Very frequently, I'm only doing 4. And for those who are listening, it's almost all automated. So what I mean by that is, like, I'll look at it manually, blah, blah, blah. I'll take the trade. I'm in the trade, and then I go walk away.
Okay.
I go hang out with my boy Casey, or I go do some push-ups, or I go do a little bit of a workout. I'll make some waffles, something. Like, go do something.
Right.
Book, meditate, whatever you want to do.
Yeah. Okay. That's pretty good. What's your criteria for the companies that you're looking for gaps on?
Nothing relatively massively specific other than they have to have really good volume. So volume is kind of the key for me. If it has good volume, I'll play it because I don't want to get caught up in something that's illiquid. It has a really bad bid-ask spread. I don't want to get whipped in or whipped out of position. So I normally play large caps because I've never met a rich penny stock trader in my entire life. So I play large caps: Boeing, Apple, Facebook, Walmart, Roku, Tesla, Square. I mean, I play the big names. And one big myth is people will say, oh, I can't play Google, Amazon, Tesla because they're so pricey. It's like, bro, you don't have to buy 100 shares of a stock to make money. Like I buy 17 shares of Google all the time, and it goes up $10. It's like, bam, there's $170 or whatever. Like, you don't have to be in a massively insane, huge position to still make money.
Well, if you risk 1,000 and you make double, it doesn't matter how many shares you have.
Bingo, man. It's all about the risk.
So it's a matter of perspective. They're thinking about the wrong thing.
Correct.
People are thinking about the wrong thing.
Correct.
They need to think about how much profit they can make, not how much money the stock is.
Boom, my friend. That's it.
Right.
That's it.
You enlightened me today. That's
Oh,
why I had
nice.
you on the show.
Awesome, dude. Thank you. Thank you.
I love it. Okay, I want to ask you a little bit about your other strategy because my mind didn't quite wrap around it yet, and so because my wheels turn very consistently, but they're a little slow. So you're getting the covered call, and I understand that. So you buy 100 shares of the stock, then you sell a call, right? And the call gives you the credit.
Yep.
Okay, so then after that, how do you get called away? So if the stock goes down, you keep the credit. If the stock goes up, you have to give up your stock?
Yep, that's exactly right. So you still have to sell your shares, but you still get the covered call premium. So the covered call premium is yours regardless. The credit from selling that call is yours regardless of what happens to the stock. It goes up, down, or sideways. That's like your rent money. So what I tell people initially is, especially with real estate, man, I get paid to go to real estate seminars all the time and talk to people about investing in the stock market. And that's my very first thing is I go, did you know you can rent out your stocks and also buy insurance on your stocks just like you can on a house? And everyone's like, no way. And so I talk about covered calls and then the collar, which is buying protected puts. So going through that strategy, it's like, yeah, you definitely can. And when you get called away, you're limiting your upside, no question. But in the stock market, the opportunities are the easiest thing to find, right? In real estate, that's the hardest, finding the deal. In the stock market, finding the deal is the easy part. That part's already done for you. Apple, boom, you're done. All right, so next, you go and just get called away and you lock in your profit. So literally the covered calls, the way I like to describe it is you're getting paid a small amount of money. But that's like me going, hey, Casey, here's $100. Don't drink soda today. Or, hey, Casey, here's $100. Sell this stock at this particular price and don't worry about it. Don't worry about what it does. Just make your money, get in, be happy, and then go find something else. That's all covered calls do is they pay you to be patient.
So then you keep the money, which we'll say $100. You keep your $100. The stock goes up, and then that person buys the stock off you at the price that you did the option at. Bingo. So you don't lose money there at all. The stock is no longer yours.
Yeah, stock's no longer yours, but if, let's say AMD, for example, you buy AMD at 50 and you sell a $55 covered call and you get called away at 55, I mean, you made $5 a share, 10% return.
So that's a win. That's a big win. Okay.
It's a big win.
Yeah, that's a huge win. You get the rent money and you get the $5. Boom. Perspective. Don't look at what you could have made. Look at what you did make.
Look what you did make, and then just go find another one. Like people are always like, what stock do I find? Dude, spend like an hour of research, or go to any stock education company. They'll have a million companies you can trade.
Right. Cool. Okay. Now let's keep going. I like to break it down, and I just recently had a guest talk about the same strategy, and so now after the third guest that talks about this, I'm finally figuring it out.
Love it.
The put side.
Yep.
So you love that company. So now you're going to go ahead and sell a put on that?
Yep.
Okay. How does that work?
I like to describe it as insurance. I came from an insurance background, and put options are literally stock insurance. It's absolutely what they are. So if you buy a put option, you're buying insurance for your stock. Now, if you buy something, someone may or may not be selling it to you. In the stock market, they generally are. So if you buy something, okay, well, who sold that position to you? So when you buy your car insurance, Casey, you pay a small amount of money per month. What are they on the hook for?
They're on hook for the payment of the car.
Bingo, which is a lot more than your monthly premium.
Right.
So they need to have a little bit of cash reserves, but they're banking on the fact that you don't crash.
Right.
So when I sell a put, I'm banking on the fact that the stock does not crash. And if it does, I need to have that money ready to go, all right, what do I have to do? I have to buy the stock. Now, if it's already a stock that I wanted, I don't care.
Well, you already had the money anyways because you already owned 100 shares of it.
Yeah, I already had the money. So it's like I'm getting it at a lower price and you get paid to do it. You receive that monthly credit, that insurance premium, just like when you pay Geico $165 a month or whatever it is. That's how much money you're making. So you're not making tons of money. It's not like this is the way to get rich, but it's mailbox money.
Well, it's consistency too, because then after doing it a while, you're going to buy two two, or you're going to sell 2 puts.
There you go, my
Right.
man. There
Right.
you go.
Wait a second. So in this situation, this is like the never-ending cycle. So now the price goes down, you have to buy your stock,
Yep.
but then now you just go sell calls.
Boom.
And you just never stop until you don't love that company anymore.
Boom.
How long have you done this for the same company? Have you done it like for every month for a year?
Yeah, I've been on Apple forever. And there will be a time where I'll stop loving Apple, but it'll be a while. So I got called away on Apple December of 2019 at $250 a share. And I felt like a real moron when I was at 320. Right? Because everyone's like, you're an idiot. Why would you sell Apple at 250? You're so stupid. I'm like, yeah, I guess so. You know, but I know Apple real well. And I'm just like, I just think it could pull back though. And the whole market was just screaming, man. It was screaming. I was like, I don't get it. Like I got called away on most things December, January, or February.
Right.
I was almost 85% in cash in February. And then COVID happened, you know? And so when the market was just absolutely tanking, I'm over here going, well, cool. That's exactly what I wanted. So Apple eventually came back below 250, right? So guess who was like, yeah, this is a no-brainer at 230. So now I get to buy it lower than I sold it for, and it's Apple. Yeah, absolutely.
Right.
Now it's back at 320 again.
Did you sell calls on it?
No, I got called away back in December. So when you
bought it again.
Yeah, bought it again.
Yeah.
And then
So did you get called away again?
No, not yet. So I haven't gotten called away yet. I'm in the June 340 covered call right now on Apple.
Okay. Now, right now, I'm thinking that this sounds too good to be true. It almost sounds like it's impossible to lose money in this scenario. How do you lose money? How do you lose money with this strategy?
Yep, I'll say that. We'll talk about that for sure. There is a strategy, Casey, that you can not lose money on for a period of time. It's called a collar. And it's all about the time that you implement that trade. It's it's all about timing. But I won't get into that in this exact discussion. The way you lose money on a stock is, let's say you buy Norwegian Cruise Lines. And you're like, love me some Norwegian Cruise Lines. And you bought it at 50 and now it's at 14, right? So renting out that stock and selling those covered calls ain't going to matter when you're down 77% on your position.
Okay.
Yep. So that's how you lose money, is you buy a stock that just never goes higher. It just keeps crushing.
And the same thing with a put. You could sell a put on cruise lines at 50.
Bingo.
It drops down. You got to buy it at 50, 45.
And it's at 15 a
Okay.
share.
So
Yeah.
so your stock has to perform for this to
Stock
work.
has to, exactly, man. No, it's
Okay.
a great question. Stock has to perform. Now, at the same instance, dude, you can always protect yourself. So that's why there's definite rules in this strategy that you absolutely want to look at, like the chart, the trend, some long-term averages. Make sure you like the company. And I'm not saying that Carnival Cruise Lines was like a no-brainer play at 20 or 30, but I didn't personally own any, because you also got to think about how much money does that company have to provide to create value. So each one of their ships is $1 billion.
Right.
You know, I mean, $1 billion.
Expensive business to be in, a lot of risk. And right now, I'm not even sure if they're ever going to come back.
That's the thing. It's just an expensive business model. Same thing with airlines. So the thing is, people have to think about it. It's just like when you're talking about oil and energy, it's like the markets are designed for companies that make really, really good products that have a high gross margin that you can sell. They make a lot of money off of it. And you know exactly how that model works. Netflix, for example. Are you kidding me? Like, it's a no-brainer. I mean, Netflix is a no-brainer longer term.
Right.
It doesn't cost them anything.
Recording has stopped.
I don't know why I did that, but we're still on.
Cool. No
Good
worries.
thing I have a backup recording.
That's fine. So yeah, you got to know your company as well, man. You got to spend a little bit of time. You got to put a little bit of research into it. And like going back to the whole cruise line thing, if we're looking at something like Boeing, right? Boeing is down astronomically a lot. So if you got put shares at 300, I mean, it's at 140, like you're losing your hair. But there are, again, you can buy put options to protect yourself if the stock does go down. You can, or looks like it's going down, or looks like it's breaking support. You can buy a put option just to protect and mitigate your risk.
All right. Well, you know what? you have really shared a lot of good stuff for us, and the guests are probably going to love this.
Thanks, man.
So I want to find out how they can figure out what you're doing these days. So what's going on with real life trading? How can they get in touch with you? What do you have for them?
Yes. So what I want them to do is if they go to reallifetrading.com, the very first thing they'll see is the dashboard. The dashboard's pretty much like their access to financial freedom. All of my education is free, so people can go. It just takes your time. It's free because it's not because it's valueless. It's priceless, right? The information. There's a cost associated with it. It's just not your cost.
The cost of taking the time to watch the content, that's a cost.
That's it. That's absolutely a cost. So go through the content. I got quizzes, I got videos, I got notebooks, I got all kinds of things they can go through. There's beginner series, intermediate series, advanced series, day trading series, futures. It's really, really comprehensive. And I would say just go to reallifetrading.com, check it out. If you are a fan of books, I do have a book called Money Grows on Trees. And it's on Amazon or Audible or anywhere else you might like to get your books. And if you do one of those two things, you'll find me. There's all kinds of information where you can track me down. And I love helping people, man. It's just what I love doing. It's my thing.
Well, it shows. And so everyone, as you're listening, go to reallifetrading.com, get access to the free trading education, sign up. I really recommend that you guys do it. Go get the book. Make an investment. Money does grow on trees, according to Jerremy, and I'm going to take him at his word for it. I don't really know what that means yet, but I'm going to go get the book myself, and I'm going to find out.
Thanks, man. You have it on that shelf behind you.
Yeah, you got it. You got it. I love getting a lot of books, and that's just a small touch of what I have. Mainly, I'm into audiobooks these days because it doesn't take up room on the shelf. Is Money Grows on Trees in audio?
Absolutely, it's on Audible. So
I
even did it,
dude. I'm getting it right now. I'm getting it right now. You see my little Audible app? I'm doing it right now.
Love it, man. Thank you so much. Really means a lot to me.
Okay, so go see Jerremy. Everything's going to be in the show notes for you.
Yep.
For you guys that are listening. It's all going to be there, really easy. You can get it off the podcast website. So. Again, thanks a lot, Jerremy. Really had a good time.
My pleasure.
Everybody that was listening, please go by, leave a review. And thanks again, and we'll see you on the next episode of How to Trade It.